Welcome to the weekly market analysis. This segment will explore the performance of Indian equity markets during the trading week of August 11th to 14th, 2025. This was a truncated week marked by a strong rebound from recent lows, snapping a 6-week losing streak. However, persistent FII outflows and global uncertainties kept volatility in check. We'll delve into the key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market showed resilience during the trading week of August 11th to 14th, 2025, a truncated week due to the August 15th holiday. The Nifty ended the week at 24,631.3, marking a 1.1% weekly gain and snapping a 6-week losing streak. The Sensex also closed higher at 80,597.66, gaining 0.22% for the week. This recovery was fueled by a combination of factors, including a rebound from recent lows, positive global cues, and renewed FII participation on Monday. The analysts attributed the Monday rally to these factors. However, the broader market underperformed the benchmark indices, with both the Nifty Mid Cap 100 and Small Cap 100 ending lower for the week. This suggests a cautious sentiment prevailed, especially in the broader market. Several factors shaped investor sentiment during this week. Foreign institutional investors' activity remained a key focus. While FII were net sellers for a week, offloading equities worth Rs 10,173 crore, DII continued robust buying, purchasing equities worth 19,000 crore. This persistent DII buying helped to cushion the FII selling pressure. Global cues were mixed but generally supportive. Soft US inflation data bolstered hopes of a potential Federal Reserve rate cut or a dovish stance at upcoming meetings. Business Line highlights that S&P upgraded India's sovereign credit rating to BBB with a stable outlook, citing robust economic growth and fiscal commitment. Hopes for a de-escalation in geopolitical tensions ahead the US-Russia summit also buoyed sentiment earlier in the week. However, concerns surrounding US tariffs on Indian goods continued to linger. On the current front, the Indian rupee strengthened against the US dollar, reflecting improved sentiment and expectations of capital inflows. The rupee closed at 87.48 per dollar, losing 0.05% during the week. Crude oil prices showed same volatility. Brent crude hovered near US $81 per barrel, trending lower, concerns over weak Chinese demand and signs of excess supply. Equity mutual fund inflows had a record of 42,702 crore in July, signaling sustained retail investor confidence. Sectoral performance exhibited rotation during the week. The Nifty Pharma Index was a top performer, closing at 3.5% gain, outperforming the benchmark index. The Nifty Auto and Nifty India Defense indices also showed significant gains, up 2.74% and 2.59% respectively. On Monday, oil, auto, and banking stocks saw strong buying interest, driving the Sensex higher. Notably, Tata Motors, Eternal, Trent, SBI, Ultratech, Cement, and L&T were among the top gainers. In contrast, sectors like Nifty FMCG underperformed, recording a 0.45% cut. Banking index also underperformed the benchmark index, closing with a 0.61% gain. Metal stocks faced headwinds as global metal prices fell and investors remained cautious about Chinese demand. From a technical standpoint, Nifty 50 closed above its pivot point of 24,606.38 on Thursday, August 14, suggesting a potential temporary pause in the downward momentum. However, most key indicators, including RSI, MACD, and stochastic, remained bearish, and moving average cost crossovers were still signaling weakness. Near-term support for Nifty is expected to be at 24,606, with resistance of at 24,677 and 24,735. On Thursday, the Nifty futures faced resistance at 24,750, and breaching this level could lead to further gains targeting 25,000 and then 25,200. Conversely, if it declines from the current level, support is expected at 24,620 and 24,500. Experts noted that the Nifty remains a short trade unless it breaks about 24,873 with volumes. The overall market sentiment, despite the weak positive close, remains cautiously optimistic, with analysts advising continued vigilance amidst mixed global signal. This analysis is based on information available as of August 14th, 2025, and market conditions are subject to rapid change. Investors are advised to consult a financial advisor before making any investment decision. Thank you for joining us for this week in-depth market update. Stay involved, stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements. Thank you.